Hello, this is Matt on the Moon Family Sedan channel. Crypto markets are a bit down today, so it's a good thing that we understand that short-term price action doesn't really matter. You know, thinking long-term is how holding XRP ends up paying off. And there's an old adage that I'm going to share with you. I'll get into it a little bit more later in the video, but it's effectively along the lines that I'll just paraphrase for the moment of when it comes to new technology, we tend to overestimate what that technology can do, especially in a moment. But over a longer period of time, we end up underestimating exactly what it can do. And if you look back at various technical innovations, that ends up being the case. And I think that's going to end up proving to be true, certainly with crypto in general, but I'm thinking specifically with XRP. It's one of the few cryptocurrencies on the entire planet in existence that actually solves real problems for real people, yet so few people are paying attention. And so even though there are already some incredible use cases for it, I think just like you've seen with some previous technologies, you don't really understand the full potential until there's broader adoption and people start using that technology for all sorts of other things. But that perhaps wouldn't be perceived of initially. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this, XRP is at 39 cents. Bitcoin is at $23,893, so scaring people back in the 23,000s, I frankly don't give a damn, because again, if we're thinking long-term, it doesn't matter. I mean, fine, yes, it's interesting to just stay in tune with what's going on. That's just because I'm hyper interested in crypto in general. But in terms of investment strategy, no, it doesn't matter. Crypto market cap as an entire asset class over 1.1 trillion still. Bitcoin dominates 41.65%, and people are still feeling greedy. You know, we've seen some down action, some stagnant action in recent days for most of crypto, and especially Bitcoin. Yet here we are at 59 out of 100 on the Crypto Fear and Greed Index. The typical retail speculator is in greed. So what exactly is going on here? Well, there is this piece written by Rakesh Upade. He's an analyst at Cointelegraph, and he shared some thoughts. The United States equities market saw their worst performance of 2023 as concerned investors dumped stocks on February 21st, fearing continued rate hikes by the U.S. Federal Reserve. Although the cryptocurrency markets also gave back some of the gains, the fall was comparatively muted. UTXO Management senior analyst Dylan LeClaire said that Bitcoin's correlation to the S&P 500 index has fallen to the lowest since late 2021. Yeah, and so I'll just pause to note, although that may very well be true, I was actually talking about Bitcoin's correlation to the S&P 500 literally yesterday. I shared a screen grab from a different analyst, and you can see that the vast majority of the time, especially over the time period highlighted, which I could be mistaken, I think it was for a year, a calendar year, or not a calendar, maybe it was the previous 12 months. It might have been, I have to go back and check, but the point is, it shows that the strong majority of the time there is a positive correlation, and it varies in degree, but a positive correlation to Bitcoin and the S&P 500. So when does it deviate? Well, it's deviated when we've seen FUD recently with the SEC stuff and attacking crypto. It very noticeably deviated in November when FTX collapsed as being revealed as an absolute Ponzi scheme. So I don't view it as like a positive necessarily. Like, so, okay, there's a couple ways to break this down. So long term, in a world where crypto is broadly adopted, it's quite possible that cryptocurrencies in general, once it's more mature asset class and people better understand it and it's clear what the utility is, it may, those assets may be treated differently than the S&P 500. But in the short term, in the coming years, for the foreseeable future, I don't know that this matters or would even be a positive, because crypto and stocks are still considered risk-on assets. So what's it matter in the end? Anyway, piece continues. After the sharp recovery from the lows, Glassnode data showed that only 21% of the coins sent by long-term holders to exchanges at the start of this week moved at a loss. This is a huge improvement from mid-January, when 56% of long-term holders' coins sent to exchanges were moved at a loss. The decoupling of the crypto and the U.S. equities markets is a positive sign, but traders must remain cautious. Again, pause. This is not a true decoupling. I see this from people all the time, and I got to kind of nitpick about this one. If you mean it in the short term, and I don't think that most people do when they talk about this, I'd say, oh, okay, fine. And that just means that there's a negative correlation or a decreasing positive correlation. So it's that they're separating. Okay, I can agree on that because that's just data. If you show data, it shows, okay, fine, I agree on that. That doesn't mean that there's some sort of fundamental shift in the way that people are treating these risk-on assets. That's just not the case. We continue to see, despite times like I cited, just like we saw in November with FTX collapse. Okay, that didn't mean it was going to stay like that forever. There are individual factors for separate asset classes that result in short-term differences. That doesn't mean that they won't, if you zoom out on a chart, still correlate. That's all I'm saying. And then they write, if stocks turn sharply lower and a risk-off sentiment develops, then the crypto rally may find it difficult to continue its gains. Now, that makes sense, but then you're talking about the asset classes being correlated, which is different than what your previous sentence stated. So I'm just saying. Now take a look at this, and this has always been interesting to me. Ray Dalio, if you know him, a billionaire who is just, I'll tell you what, the vast majority of stuff that comes out of this guy's mouth, I'm like, rah, spot on, totally agree. When it comes to crypto, he's been slow to adopt. He's one of the people that when it comes to Bitcoin, he didn't get it. It doesn't make sense. But finally, he got to the point where he started rethinking his own thinking, as any insightful, intelligent, honest person should do. At some point, enough time passes and adoption continues. You got to look inward and be like, if you're a person says this doesn't make sense, it's going to fail. At some point, you have to look inward and say, okay, what do I have wrong? And this certainly applies to XRP. So for all the Bitcoin maxi trolls out there, if you've been hating on XRP, well, it's been around for a decade now. And if you look at real world adoption for various use cases, it does nothing but increase. Even despite SEC attacks, even if you want to look at price action instead of just fundamental analysis, I mean, both are important and interesting, but if you want to switch and look at price analysis, XRP's always been in the top 10 cryptocurrencies by market cap. So to the XRP haters out there, how about at this point, because it's been a decade, how about you look inward and ask what you're getting wrong, just like reasonable, honest, intellectually honest people will say about Bitcoin. If they've been hating on Bitcoin for just as long or longer, they should look inward at this point and be like, it's still here and adoption just keeps trending upward despite massive pullbacks. What do I have wrong? What do I not understand about crypto? And so Ray Dalio, he's been trending in the right direction, let's say, but despite the fact he finally got to the point where he ended up buying at least what he calls a small amount of Bitcoin, which frankly is probably more Bitcoin than the typical person holds, given that he's a billionaire. Despite that, whatever the quantity is, the point is he has dipped his toe in the water, but he's still skeptical. And I think in some of the ways he's looking at it, it seems to be a bit of a misconception. But you see this, again, with new technologies in general, and this is kind of what I wanted to get at. Hell, I'll just mention it now. There's this guy named Roy Amara who coined this adage, which ended up becoming known as Amara's Law. And I'm sure some of you have actually heard it before, even if you're not sure who you should have attributed it to. Here's a picture of the guy who happens to be on Wikipedia. But this is the adage right here from Roy Amara. And so, oh, by the way, so this guy was an American researcher, scientist, and futurist, and president of the Institute for the Future. And he's best known for this adage he coined, which is as follows. We tend to overestimate the effect of a technology in the short run and underestimate the effect in the long run. Now, this is true of so many technologies. Maybe you could find some outliers, but in a general sense, it tends to ring true. I mean, think about just with the, what was the biggest technological evolution or revolution before crypto? It was the internet. I think that's fair to say. When mainstream adoption has started in, just call it, say, roughly the mid-90s, people were overestimating what was going to happen given especially the current state of technology. I mean, can you imagine even the people that did understand, hey, perhaps, you might be able to stream videos and movies using the internet. Try doing that with a 56K modem. Good luck in the mid-90s trying to do it. You could do very little and very low resolution videos if you did take the numerous hours to download a 30-second clip, which I did as a teenager. I'm just telling you, it wasn't exactly the same internet that we have here today, which just works seamlessly. It's integrated into life in ways that we couldn't have fathomed back then. And so maybe we got some of the ways in which things would evolve, but there was a lot of overestimating in the early days. But if you look at the ways in which it's integrated into our lives now that we're sitting here in 2023, I think it's pretty clear that the people of the 1990s underestimated the degree of which the internet in general would be useful. How many people back then thought that they'd have what was effectively a supercomputer in their pocket or their purse at all times, and could just call up strangers' vehicles on demand, Uber, Lyft, etc.? Who would have thought that would be a thing? You have at your fingertips, the sum of all human information, which comically makes me think back to this idea when I was growing up. A teacher said that I needed to make sure that I learned my math because it's not like I'm always going to have a calculator in my pocket. Except I do. Except I do. See, that's what I'm saying. You didn't see, exactly what a technology would evolve into. Well, similarly, I think it's kind of like we were still 14 years into crypto, fine, but it's still the early days. And so in the earliest days, there's been a lot of overestimation in terms of, Bitcoin or pick your crypto taking over in terms of how it would be used, in place of money and this and that. But in the long run, I think that there are all sorts of use cases that haven't even been envisioned yet that are going to take over our lives. There's all sorts of stuff, and we're starting to see the evolution of some of that. And with NFTs and how royalties for content creators of all types is going to change moving forward. Like all of this is coming, and we can see glimpses. We can see some of it, and some of it's going to pan out, and some will pan out in ways that would prove that some ideas were incorrect. Of course, that's normal too. But in terms of the degree to which it's going to impact us, well, I think that most people, if you fast forward, are going to have cryptocurrency be using it, integrated in their lives directly or indirectly in some way. However long that takes, what form it'll take, I don't know for sure, but that's why it's kind of fun to figure this out sitting here in 2023, because I don't know. But that's kind of exciting too. There's a lot of opportunity. So I look at XRP, and if you look back at XRP's use cases back in 2015 versus 2023, now that we're further along, you can see we're shifting in that direction. More and more use cases. It's going in the right direction. And as long as there's true utility, I don't think that XRP is ever going to cease to exist. And that's kind of the broader point that I wanted to make. So maybe underestimated and even misunderstood in the short term, or overestimated rather, but misunderstood in the short term, but understood in the future. And, but if we're looking at the future, from our vantage point here, we're probably underestimating. So if XRP is going to be one of the handful of cryptos that actually exist for the long haul, I can only imagine what that means, including not so obviously in terms of fundamentals, but certainly in terms of price action. If we're right in terms of its long-term viability, there's going to be all sorts of additional uses for it that we haven't even thought of yet. And that's exciting. So it's like, I don't know. It just makes me wonder how many of my suppositions are going to prove to be right versus wrong, because there's no way I'm going to be right about everything. None of us will be. But again, like I said a minute ago, that's really part of the fun. Now, as far as Ray Dalio, though, I think he's kind of missing some key things. So check this out. Hedge fund veteran Ray Dalio doesn't think Bitcoin or any other crypto asset represents an effective store of wealth. So I already got to pause there. In terms of store of wealth or store of value, whatever you want to call it, there is no entity that gets to decide the exact parameters of store of wealth. And this is why human language is kind of messy in general. We all have these subjective ideas of what store of wealth is. And so in a general sense, you could say that it's something that keeps its value or gains in value over time. But then it's, okay, gains in value relative to what? Over what period of time? Can it be down and then go back up and it still counts as a store of value? Well, there's no organization out there that's, tasked with determining this particular definition. And even if there were, I'd say, who put you in charge of the human language? Like who this definition specifically? And so this is kind of the messiness of what it is to speak it in any language. But it's my point here, though, is that it's subjective. And so what's a store of wealth? Well, I'll tell you this. I've invested in crypto. I understand it's volatile AF, but I'm using it as a store of wealth because I think that over time it's going to be worth more. It doesn't have to stay at net zero for it to be a store of value. Most people assume store of wealth, increase over time. At least over time, stay neutral, but increase ideally. Well, that is what I'm doing. So for him to state that, my XRP can't be used for that use case, I respectfully disagree. I think that doesn't make sense. I think that he's using a different understanding of the term, and there's nobody that's regulating it, and so we can talk past one another. But if we're talking about it in the terms of how I just described it, I think tons of people are doing that, expecting it's going to be worth substantially more in the future. Similarly, you could call gold a store of value. There are people that call investing in equities that's a store of value, a store of wealth, same thing. So when he says it's not true with crypto, that rings hollow to me. Piece continues. In a new interview with We Study Billionaires, longtime crypto critic Dalio says the digital asset space receives a disproportionate amount of attention given its relatively small market cap. He argues crypto assets don't work well as mediums of exchange or stores of value. Let's pause right there. Crypto assets, depending on which you're talking about, can work fantastic as a medium of exchange. And even the ones that don't work well as a medium of exchange due to technological limitations like Bitcoin, well, that problem can be solved with layer 2 technology, and it has been solved with, in the case of Bitcoin, on the XRP ledger utilizing spin the bits. So I would still disagree with that. I think he's wrong on that, and I don't know if he's aware of this, or for some reason he's just not articulated a reason he disagrees. But that doesn't make, none of what he's saying there makes sense to me. So I wanted to push back on this concept. But here's a quote. There's a technology, the blockchain technology, which I think is an excellent technology, and I think it's very important to distinguish it from a digital currency. And if we're dealing with digital currencies, let's use Bitcoin as an example. First of all, I believe we're in an environment in which we're creating a lot of debt. And I know and money as we know it, and financial assets such as debt assets, I think we're in an environment that's not going to be a good environment. And people will want to look for alternative storeholds of wealth. So pause there. People are going to be looking for additional storeholds of wealth. And here's part of where I might have some overlap in agreement with them. Look, crypto, as I was saying earlier, crypto and equities. You know, if you're just talking about risk on assets in general, in tumultuous times, people are less interested in those things that are seen as or viewed as risk off. That's where the money goes because less volatility is what's desired by those people in those particular moments. So crypto, if that's where he's going with this, and I say, yeah, of course. That's why again, like I keep saying, I've been saying it for forever. You know, crypto moves in tandem with stocks. It just does. Anyway, the rest of his quote is, having said that, all the digital currencies basically don't replicate anything. They move up and down. It's not like they are an inflation hedge, end quote. Well, okay, so again, I get it. So I'm using my crypto as a store of value. And you can argue with me on the definition, but we go to the definition and it's just, there's so much room for interpretation. It's like, is it a useful definition? To some degree. But as far as an inflation hedge, I mean, that's not how I personally view it. And I don't think that people are going to be, in a general sense, you know, thinking about it quite in that way. And even if they're individuals that do, fine, I'd accept that. But on the whole, that's not how people are treating crypto. And that's provably true just by looking at the real world data. So all this to say, I'm glad that he's dipped his toe in the water and he holds some Bitcoin here, but he's got a ways to go in terms of his analysis here, because if he's not yet recognized that there are valuable business models that can only exist with this technology, and not just blockchain technology, but with decentralized cryptocurrencies attached to them that have open market prices, if he hasn't gotten that yet, he's got quite the awakening ahead of him. I recognized that in late 2017, right after I jumped into crypto. It didn't take me long. That was my aha moment, and it was with XRP. And Ripple's use case, that's when I had my aha moment. Then I recognized there are also other business models that can exist that are impossible. And these are valuable business models that people want and they're not going to discard. That's important. That's what I'm saying here. And so it's easy. And this is another example of why you can see how, again, in the short term, here, I'll pull up the adage yet one more time before wrapping up here from Roy Amara. Amara's Law. We tend to overestimate the effect of a technology in the short run and underestimate the technology in the long run. Well, I'm willing to bet that's true of XRP, and to me that's exciting because there's an I'll just hold back. I almost cursed. There's a metric F-word ton of opportunity here, regarding XRP in the future. So I'll just leave it at that. But you let me know what you think. I always think it's fun to have discussions on these topics. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.